Welcome to Diamond's Edge Live. My name is Greg Diamond, editor of 10 Stocks Trader at Stansberry Research. An important show this week, important earnings coming out, the Federal Reserve meeting in a week, okay? And what I really want to hone in on are the various scenarios, both best case and worst case, okay? How earnings fit in, how the Fed is going to fit in, how bonds are going to fit in, okay? And what I want to get started with is let's go back in time a little bit and think about what happened heading into March, then April. Okay, we are looking at possibility of these April lows or late April being a low. If that was going to be the low, I said, this is going to be something I'm going to be all in on, right? Well, now we're into late April and we're at, kind of in the medium range or in between the range of the high in January and February and the low in early April. Well, what does that mean now? That's what I'm going to cover. Okay. What is most important about these time factors, these time cycles that I talk about, is how a market trades into it. Any market. Okay. In this case, we're looking at the stock market, specific stocks, the major indices, sectors, what have you. So, what I want to go over now are the best case, worst case scenarios of what we can expect going forward. All right. We had, some volatility to start this morning. Stocks were down over 2%. It's fought all the way back to almost positive. Okay, so let's start off, and let me share my screen here. Let's start off with the best case scenario. Okay, and then I'm just going to go over this with just the S&P, just to keep it simple. All right. So what I want to show you here, and again, so what's the possibility here is that this is just a big correction that ended in early April, right, when we saw the 90-day pause, okay, and stocks are grinding higher. Now, what could this late April timeframe, which we're obviously in right now at the end of April, okay, this could mark the breakout confirmation of a wave three. Wave three is what we see when stocks just rally, okay? So, and we have this big move. Now, it's a grinding issue or a grinding wave. It's not this huge breakout that happens real quick, okay? But what we do see is that, it frustrates shorts, okay? It frustrates bears. And what we see is this rally, all right, where we have this in the blue line, where we have just with this new trend line, new channel trend line within black, and then the blue keeps rallying, right? And this is as simple as it gets. This is the best case scenario, is that lows are bought kind of like this morning, okay? And we just keep grinding higher. Again, it isn't as explosive, but in terms of Elliott Wave, it still matters, all right? That's the best case scenario. Let's go to another scenario that I'm considering, okay? And this is where it gets a little bit tricky, all right? But what we can see here is outlined in black is that instead of this late April timeframe, which again, we're obviously in right now, marking an all-time low, or not all-time low, but a significant low, it marks an intermediate high, okay? Again, let's go back to, what I mentioned at the start. How a market trades into these time frames is what is the most important. Now, sometimes it's a big inflection point, sometimes it's not, all right? Sometimes, like I mentioned, in the best case, it's this breakout, right? But what we can see here is we have this pause. You can also see I have these trend lines here that mark lows and mark lows. When it broke, now it's resistance. Okay, fair enough. Now, obviously, you can see here on today's price action that we dropped and rallied. So what if we have? Let's talk about the next time frame going forward. We're at the end of April. Okay, we either have this short-term top or it just confirms the breakout, which is the best case. What happens next? We have what's known as natural dates into the first week of May. There's a ton of earnings, and then obviously the Federal Reserve meeting next week, okay? May 15th, around that time is sticking out to me, and then we look out into late June. Those are the next set of time factors that I'm looking at, okay? In terms of some of my cycle work. So what could be a possibility? It's not necessarily the best case scenario where things just keep grinding higher, but creates a little bit more volatility. And then what we can do is basically look for this, okay? So we have wave one up, all right? And then this A, and then today or this week, late April, let's call it, was the B wave, okay? And then we get some choppy volatility heading into earnings, heading into May, okay? And then we get this C wave bottom. And let me zoom in on this. So let's say this low in the S&P 500 around 5,100, all right? Let's say that just barely breaks heading into mid-May. That to me would set up this scenario where we get a higher low, April, excuse me, okay? You can see here I have a higher low versus the Mag 7. So let me skip ahead real quick, okay, and focus on the Mag 7. And, we're looking at the big tech stocks, okay? In this example, subscribers for a couple of weeks now. And basically what we're looking at here, this is Google. And on April 25th, I noted, hey, we have a possibility for, all right, it stopped at the 38.2%. That's a high character trait for a wave 4 to stop at. Also the symmetrical move in red. But you can see here I have this wave 5 low. And look where I have the low at, okay? Whether it's of May or the second week of May, mid-May, okay? If we see this volatile move in individual stocks, the big tech stocks, but if we have something where it goes like this, let me do that again, okay? And then we get that low, okay? And whether it makes a new low or it doesn't really matter. But let's say we get a new low into early May, the first 2 or 3 weeks of May, whatever. All right, and then we have something like that. Let me put this up so you can see it, okay? And what we have here is something where, again, Google or Microsoft or Apple or Amazon makes a lower low, but at the same time, you can see it right here, okay? At the same time, the S&P, the Dow, the Nasdaq, obviously, maybe semiconductors, does not make a new low below this early April low. That sets the stage for price divergence. That sets the stage for a massive run higher. Okay, so that's another scenario. Okay, now let me get to the worst case scenario. And when I say worst case, this kind of goes back to what I said when we first started Diamond's Edge Live. Really, was that we could have had. Obviously, we didn't. So bear with me. I'm looking at this from the perspective of how these time frames, how these time cycles shake out. So it was a low into March. Okay, we get a rally into mid-May, and then that mid-May creates a June low. All right. So what would be, now that we know that low, the March did not make the low, but is it possible that this time frame a high, right? A lower high. Yes. All right. This is the worst case. Okay. Okay. And you can see that. All right. We get a top today. Reserve comes out and they said, whatever. They're not going to lower rates. Earnings are as bad as it can get. Okay. And then pure panic sets in. Okay. And we have this choppy downtrend. But it will likely be, it'll feel worse than it actually is. And I'll explain that in a second. But this is where we would have June. All right. Now, why is this important? I'll tell you why this is important. And I have it here. This is the completion of the fourth wave from the 2022 low. What does that look like? I'm going to show you right here. All right. So this is why I say it's the worst case, but it's actually an excellent, excellent, excellent buying opportunity if that is what happens. All right. So what we have here, again, is something, this is the 2020 COVID low, all right? So what you can see here is we've had this support that have held. Now let's say we get the worst case scenario coming off of this April high, all right? And this is just on a weekly chart of what it would look like. Essentially, and you can see here I have this June highlighted, all right? Maybe we trade down to the 200-week moving average, whatever it might be. We trade down into this lower level support that's been in play, again, 2020, 2022, early 2023 or late 2023, and then we're off to the races all the way into, that would likely mark the low for the year. Okay. So regardless of how this shakes out, best case, worst case, to me, this is a bullish setup. To me, even if the worst case scenario happens, we create some volatility. It's something where we could trade volatility. Okay. If we get that worst case scenario where, it's not always the case where I trade any of the VIX ETFs, but that could certainly be uptrend resistance line. Okay, almost came there down today. We rallied. All right, all right. And so now in blue here, you can see it's very similar to the best case scenario in the S&P 500. We get through the Fed, we get through earnings, and if we just grind higher. Beautiful, no problem with that. We can add call options on dips. We can just add to our triple long ETFs. Okay, there's a bunch of different things we can do, but we're kind of sit in the driver's seat and let this uptrend, lead the way. No problem there. In black is kind of similar to what I outlined with the high or low in the S&P 500. Okay, similar. We get a low into mid-May, and then we rally. And then worst case again is in red. This is a big wave 4. You can see I had this question mark. Okay, what does this wave 4 do? Is the wave 4 into the Fed? Okay, the Fed disappoints the market. Okay, and doesn't cut rates, and that creates that low into the end of June. Possible, very possible. I could deal with that because again, and I always like to tell 10 stock trader subscribers, it's easy to listen to the noise and get emotional about it, get frustrated with it. But I always say, hey, just look at the price setups, look at the time factors that we discussed, how they're trading into them, and that will help you, kind of just put that noise off to the side, regardless of what that financial media is saying. Even the worst case scenario to me is setting up for a home run. Okay, for the latter half of the year. So that's Microsoft. Here's AMD. You can kind of see here. I don't have anything labeled on here other than just this is obviously converging for a big move. All right. So is that big move going to be the best case scenario where we just grind higher, or does it, grind lower? Do we get a higher low in mid-May, and that creates a rally? I believe AMD reports earnings on May 2nd. Okay, so that falls within that window. All right. So there's various scenarios that we can look at, okay, but I view it as constructive. We just have to see, again, how this late April timeframe, is this marking a short-term high, or do we simply just grind higher from here, okay? That's going to dictate how we trade next. The other thing I want to highlight is bonds, okay? So I was looking at the possibility that bonds could rally with stocks, and we're seeing that, right? Now today, we had, not as much price action as we did in stocks, okay? But from a longer term perspective, let's focus on whether bonds and stocks are rallying together, okay? And what's going to be, the biggest, probably the biggest catalyst for what's happening in interest rates, and that's going to be what the Federal Reserve is going to do next week. We also have the jobs number coming out. We have more inflation data. Some of that has been mixed. Okay, so how is that going to dictate what the stock market does? I think this is very, very, very important. Okay, but it's also going to be, we have to look at this in conjunction with what's happening with the stock market, and then we'll fit in those time frames going forward. So there's going to be a lot to cover. Again, I think it's going to be probably one of the most important 2 weeks of the year with the Federal Reserve and major earnings, how tariffs affected everything. Are they going to, let's say it's the worst case scenario, okay, and then everything gets flushed out, everything starts getting better again, okay? The worst fears that investors may have had actually turns out to be the best buying opportunity. So there's going to be a lot to focus on. I think we're going to have a lot of trading opportunities regardless of which scenario unfolds. So that's what I have to cover this week. I'm happy to take any questions. Any thoughts on Tesla? Yeah. So I covered Tesla, I believe last week, and we were looking at how Tesla tends to bottom around April and May historically. So this kind of here's something that on a short-term time frame I was looking at not too long ago. I think it was over the weekend. Okay, so we could see here, and this is where a Fibonacci confluence zone. All right. And what I like to see, or what I like to look for, are various measurements from highs and lows, okay? And then I try to see, what has the biggest confluence of resistance. Now you can kind of see here, this Tesla's starting to top out around this 38.2 Fibonacci retrace level, all right? So if that's the case, what does it look like from an Elliott Wave term? To me, this looks like this: 1, 2, 3, a funky 4, and then a 5. Okay, so then if we look at that with Microsoft, Google, Amazon, even an AMD or Apple, okay, do we get this wave 5 low, into mid-May, into the Federal Reserve next week, or is it the worst case scenario where we simply, drag down into June? Best case, this already topped, okay, um, this bottomed, okay, and what we're doing now is we're starting a new uptrend, and that would go in sync with what we looked at last week regarding over the last few years. And you can go back, you can see how April and May have tend to mark bottoms for Tesla. So we're right in that time frame right now. Something to keep an eye on is Tesla, definitely. Can you take a look at Orla? Sure. Orla Mining, okay, and this has had a very nice run, and you can see here we almost had a positive RSI reversal or positive CI reversal, okay, but this has been in a nice uptrend, okay. That's about as simple as it gets, as far as I can see. I've never traded this or looked at it, but I mean, keep it simple, stupid, right? That's what I tell myself sometimes, and right now this is pretty simple in terms of an uptrend. So sell it all, get some money while we can. No, I don't agree with that. Because essentially what you're doing is you're looking at, that's the worst case scenario, but the worst case scenario is, let's call it another month or two, okay, and then you have an incredible buying opportunity for what I view as new highs, new all-time highs, within the following 6 months. So that's not something that I would recommend doing. How do you feel about Palantir? So this has been a very, very volatile stock, defense contractor stock. Okay, it has had a lot of momentum, coming out, basically from zero, traded all the way up to 120. Okay, and this looks to start to be taking a leadership role. Okay, it hasn't something. It's not something I've been trading, just something I've been looking at. Okay, but this again, obviously, is leading the market because we're almost back to new all-time highs in the stock above the February highs. So this looks to have a sustained uptrend, at least right now, starting out. If there is an average time frame that it usually takes for the Elliott Wave cycle to complete before starting again, can there be big gaps of time between the wave cycles? Usually the big gaps of time are wave 4s. Okay, so let's go back to here. So, or wave 2s, right? So corrective moves within the larger uptrend or downtrend can take the most amount of time. So if we just, and this is as simple textbook as it gets, okay? So from the COVID lows, wave 1, wave 2, wave 3, I believe this is a wave 4, again, whether that's already in place or it happens in June, okay, and then we get the wave 5 up. So you can see here, the time frame, basically all of 2022, took a lot of time of this over this corrective pattern within this larger uptrend, okay? And now we're seeing the same thing with the wave 4. They're not always exactly the same, but they tend to take up a little bit more time before the uptrend resumes. What's going on with the Nvidia sell call? Is the AI bubble starting to burst already? I don't think it's starting to burst. I think it's, we're within, AI is just kind of is getting started. Not getting started, but it's, it's well within, I would say, a time cycle of, what happens with new technology. It takes off, it pauses, it takes off again, it pauses, okay? So if and let's go back to the earlier question about gaps in the time cycle, how long does it take? Let's look at this long-term chart of Nvidia, okay? And you can see that there's a pretty nasty overlapping corrective move. Why do I say it's corrective? It's because it topped, but it didn't have this vicious, 2000 bubble like, or 2008 to 2009, crash to it, okay? It's overlapping, and to me has all of the indications again of a much longer term wave four. If we go all the way back to late last year, you everyone was all bullish and all bullish and all, and I said, look, because of what's happening in semiconductors, we need to take a step back because I think that this divergence is telling us, that we could be in for a larger correction. That is the case. So, but I still view it as a much larger correction within a much larger uptrend. Okay, you can see here. Okay, so it's we're going all the way back and saying, okay, is this a crash or is this just another part of the bull market? And I think it's another part of the bull market. It just happens to be a longer correction. Thoughts on Service Now? This is a stock that I have not traded nor looked at. So just basic technical analysis here. It broke below its 200-day moving average, but gapped much higher. Okay, it's trying to hold on to that today. So and still within a much larger uptrend. So again, to me, this would have the indications similar to some of the other stocks we're looking at that this was a larger correction within a much larger uptrend. Any feeling on adding some kind of crypto ETF to the portfolio at this point? Not yet. It's not something that Bitcoin tends to trade as a risk on, risk off asset class. I've traded Bitto calls, Bitto puts in the past. It just doesn't keep up with at least the options in terms of the underlying. Now that could change. Okay, if I see something that I like in the crypto space that we could add. It's just I'm much more focused on what's happening in the stock market and bond market right now. Could stronger than expected earnings spark a sell-off in bonds? If so, what chart signals would warn you first? I don't think stronger earnings would spark a sell-off in bonds, but it doesn't. I like to say the why doesn't necessarily matter. Okay, what would likely spark the sell-off in bonds is inflation that has resurged again. How is the Federal Reserve going to respond to what's happening in the market, both stocks and bonds? Okay, so what we're going to be looking at there, again, we'll find out in the next week, is are they going to cut rates? Are they not going to cut rates? And then how does the bond market react to it? To me, the signals are, and I kind of highlighted earlier, all right, do we start to see, so this is TLT, okay? Do we start to see bonds? Is this a double bottom here in TLT, okay? And now bonds and stocks have bottomed, okay? This is something that we've covered recently. And now and it could be a slow grinding move higher. Bonds grind higher, stocks grind higher. That's obviously the best case scenario. But we just have to get through, what the Federal Reserve is going to do or not do, what do they say, and then how the market reacts to it. That to me is the biggest signal, not necessarily because of earnings. I think it's going to be more based upon what's going on in the trade war. If that eases, is the bond market going to signal that to us? Absolutely. So I think trade war, inflation, and what the Federal Reserve is going to do is going to have more impact on interest rates than stock market. So, thoughts on IWM? Yep, IWM is one that we've traded a lot recently. Okay, and you can see here, good question because I have it already have it drawn up here. And this is something that I was looking at. Okay, do we have this wave 4 into this late April time frame, and then do we get this drop into wave 5, or we can remove these big red numbers, okay, this Elliott Wave count, okay, and we already have, you can see here, this completes the move, and now we start a new uptrend that looks like this, okay, similar to what I outlined in the best case scenario. Now look at this is pretty cool. So it might be hard to see, but we had this low again on April 9th, okay, rallied into, we had a rally and a drop into the 21st. This held the trend line, and I just drew this 3 points. That held perfectly on an intraday move today, and now we're rallying. Now, if this breaks, okay, we're looking at something different, but this could start this similar to what I outlined in the S&P 500. This could start a new, up channel where we just simply grind higher. Analysis of gold and silver miners. Yeah, I highlighted this last week. I can give you some analysis of it, but I'm just going to keep discussing it. What we've seen with the mining stocks relative to specifically gold, okay, relative to what's happening to the underlying, relative to what's happening to gold and silver, right? Obviously, gold is at new all-time highs, and this is GDX, and it's come close, okay, but it hasn't surpassed the GDX. The gold miners hadn't surpassed the high in 2011. Okay, I mentioned it last week. This is just something that I'm going to stay away from, at least for now. All right, I want to see how silver and gold, react. We have the dollar. There's a lot of different things happening in that market space right now, so it's just something that I'm staying away from for the moment. Okay. I'll look at the silver miners real quick too. You can kind of see the similar setup. All right, silver is breaking out, but look at silver miners, massively underperforming. Okay, now obviously you could have made money trading gold or being long. Okay, I'm not saying that you couldn't. I'm saying from my perspective as a technical trader, I like to see more confirmation to really start getting aggressive, especially with call options, and we don't see that here. So that just gives me pause. And maybe we do see this correlation pick back up. Let's see what happens with stocks and bonds, and maybe we see a correlation that starts to develop with those, and we can start trading, GDX or the silver miners. Okay, so a lot to focus on this week. Next week we have the Federal Reserve along with more earnings. Okay, so I outlined scenarios, plenty to focus on. Thank you for tuning in, and I will see you next week. Appreciate it.